oh, well, the interest rates are too high right now to buy a house. It's a home run with all bases loaded.
Yes. Grand Slam.
Grand Slam.
Yep.
Yes.
The government printing a lot of money. Like, this has to happen or this has to happen. The stars have to align. The planets have to align.
Exactly.
It has to be a solar eclipse.
Buyers are scared to buy right now. Empty the bank account or ask mommy and daddy for them Trump checks.
The Trump checks, the list price on the home was $370. We got it for $350, so that's $20,000 off right there. And then we got another $14,000 in closing costs. To me personally, I'm like, is that the best time for me to shop?
Yeah.
So let's talk about the big elephant in the room right now is interest rate. And a lot of buyers are scared to buy right now in the market because the interest rates are higher than what they've been in the last 2 years.
Yeah, I mean, I think they've been even more than 2 years, right? I think the 2 years was the little exception, right?
Yep.
I feel like the last 2 years was a huge anomaly in a lot of businesses.
Yeah, for sure. I mean, interest rates were under 3% for a lot of our buyers. They were under 3% when COVID happened.
Yep, under 3%. The government printing a lot of money. A lot of stimulus, a lot of stuff to businesses just to make sure the economy was still running.
Them Trump checks.
The Trump checks,
And the PPP loans.
PPP loans. I hope you spend your PPP money wisely.
Yeah, I hope you did too.
But no, I think that was kind of the whole thing in regards to interest rates. But regardless what interest rates are, if you have the means, I would tell you to buy because you can get a better sales price.
Yes. And then when I was explaining to some folks that were talking about this, I had a guy say, oh, well, the interest rates are too high right now to buy a house. Okay, what were you saying a year or two ago? Oh, I don't have enough money to put $50,000, $60,000 to $70,000 over
I think
asking.
me and you've made this thing very clear. There's some people that they're never going to buy. It's like this has to happen or this has to happen. The stars have to align. The planets have to align.
Exactly.
It has to be a solar eclipse and it has to all of these things have to align for me to buy. And it's like those people, it's never really.
Well, it's not. You're never going to have the perfect situation.
No.
It's like, well, 3 years ago, if you want to empty the bank account or ask mommy and daddy for, a gift to be able to buy a house or even stay competitive and offering on a house, then I guess you can do that. But now we've changed.
Yep.
The feds have kind of, put a halt to that and they raised the interest rates. Now it's much easier for a buyer to buy a house.
Well, I think the thing is, right, the feds raised the interest rates specifically to stop consumers from buying.
It was crazy.
Right? It's very artificial, right, to stop. Yep. So I guess my thing is, right, I'm a very against the grain type of person.
Okay.
If everyone's at the, let's say, Walmart, right? Let's say everyone's at the Walmart, Black Friday, right? Or something like that.
Oh, it gets ugly on
right?
Black Friday.
Okay, whatever. Everyone's at the Walmart. To me, personally, I'm like, is that the best time for me to shop?
No.
I don't feel so.
No, it's not.
I'm like, I want to go the day after or something when it's like, or very...
Most of the stuff is going to be gone.
Well, no, everyone's... stuff will get supplied back and stocked back and everything.
Yeah.
Right? Stuff comes and goes. It gets stocked again, everything like that. To me, I'm like, well, do I want to be in that market where minimum, if I put in an offer, I have to go 30, 40, minimum above asking price. And I still might not get it.
Yeah, you most likely won't get it.
I have to not do no inspection.
Yep. Appraisal gap.
So, right, so if I'm putting, let's say 20% down, on a $200,000, that's $40,000. And then I do another appraisal gap for another $40,000. That's $80,000. We're not even talking closing costs yet.
Yep, which is 3%, depending on if you're conventional. It can go up to 6% with FHA. So the viewers know.
Said all and done, right? On a $200,000 house, which is nothing, right? On a $200,000 house, you're not. You're spending almost close to half of what the house is.
Yeah.
In regards to sales price, this, that. Whereas in now, that same $200,000 house, yes, the interest rate is higher. There's no sugarcoating that. but that seller would probably sell for 150, 120. Who knows, 100. Maybe they'll sell for 150 and give you another 10, 20,000 in closing costs.
Yeah.
So you've just saved.
In the past month, you saved a lot of money, but in the past month, our buyers have all gotten closing costs contributed to them or all paid for.
Yes. I mean, I have a client right now. The list price on the home was $370. We got it for $350, so that's $20,000 off right there. And then we got another $14,000 in closing costs.
And that's great. That's a home run.
That's $35,000.
People that are looking at this, viewing this, and if you're someone that's on the fence, that right there is a home run with all bases loaded.
Yes. Grand slam.
Grand slam. Yep. Yes.
Baseball terminology.
Yeah. I play basketball.
And so I think the thing is then, the interest rates will come back down again. The interest rates will come down. That's when you refinance, you get the better rate, and now you have the great price, you got the concessions, and you got the better rate.
You got an inspection that's done, no appraisal gaps.
Yep.
Like, everything.
There's no major problems with the house. Obviously, you move forward with it, but I mean, I can't tell you probably the amount of people that skipped an inspection, did the appraisal gap,
I still
paid way over.
Yeah, I advised.
Right, they move into the house months later. There's some huge issue with the home or this or that.
Yeah,
something maybe the seller didn't know or disclose or whatever the case may be.
Yep. Yeah, because it's not 100% when you have a seller disclose when they're listing how it's all to their knowledge.
I think the best story I can give you, we'll do one final story, and I feel like stories are the best way to convey a message, is my own personal story. I bought in 2019 when interest rates were around 4.5 to 5%, so not like they were.
Not crazy.
So it's
but
like somewhere in the middle.
That's a great rate.
I
hope it gets back to that.
Yeah, somewhere in the middle, and I got, and it was just kind of starting to creep up towards that crazy market. And I bought a house. I got seller concessions. I got the house. It was 4.5, and then when the interest rates went lower, under 3, I just refinance.
You refi. That's it. That's the name in the game with this is to refi. Yeah. Get the property, get a good deal on it. Yep. When you're not giving up your right arm.
Yep.
And then just refi when the rates go down.
Yeah. And most investors are locked in ARMs, which are adjustable rate mortgages. And most investors go based off of that. They get the best interest rate, the best price, and then they're at the mercy of what those interest rates will be in the next 3, 5, whatever years. So, back to what we were saying, if you're on the fence about buying, you have to talk to us. You have to run the numbers, right?
Run the numbers. Great lenders that can run numbers.
I'm telling you, whatever makes sense for you, do that. We would never tell you to go against your financial situation, whatever the case may be. And if it is a time where the interest rates just take you out of the market, then that's okay.
That's fine.
Yep. You just save, and whenever you're ready to strike, you load your bullets, and then when you're out, you shoot.